Hello there, traders. Welcome to the Markets in Free with me, John, Senior Market Analyst here at Anzo Capital. What a week it's been in the FX market. Considering we've had light data, the markets have been moving aggressively. You can say that it's low volumes at the moment because we are in the summer months, so some of these moves are being slightly exaggerated, but we've had a lot going on this trading week. So I'm going to digest what has happened this week and maybe some top Forex setups going into next week, because obviously the markets are moving. But I want to explain what is actually driving these markets, why we are seeing the moves that we are seeing, and how that can translate into your trades going into that next trading week. So we're going to get straight into it. I'm going to go check out the overnight news first, and then we can get into the charts. So apologies, sorry, still got a little cough recovering from. So what we can see here is that dollar has marginally softened. Dollar yen is a bit choppy overnight following the most inline Japanese inflation data for July. The big news yesterday was really that US treasuries have continued. We've started to see basically Scott Bessent announce more sort of bond buybacks, and that he could even he even said that he could potentially increase the amount of buybacks that they're going to do. He's basically trying to bring those long end yields down, but the market is ignoring him right now. So Fed has lost credibility, bond market has lost credibility, or the Treasury has lost credibility. So everyone is pretty cooked at the moment. So we'll digest that in a minute. Like it says here, 10-year US Treasury futures lingered around the prior's day trough. Bund futures mildly retreated, and the 10-year JGB futures tracked previously declines in global peers. Crude futures were contained overnight with a lack of major fresh developments. Spot gold resumed its recent choppy performance. So in terms of kind of like overnight news, there wasn't really much. What we've seen today is some events though. So if I just pop in today's filter, select all, we've had some data overnight. So first of all, we've had the services PMI coming out of Australia. They were good, in line above that 50 level. So showing that this was the key data that we wanted to have a little look at, this Japanese yen. So core inflation rate year on year came in at 1.8%. As expected, a little jump from that 1.6. Inflation rate year on year jumped up to 1.9%, beating those forecasts of 1.7%. But we were expecting some increases to inflation because the BOJ has been discussing this on a weekly basis. We then had some retail sales out of the UK. So retail sales ex fuel came in at minus 0.9%, which was way lower than forecasts of minus 0.5% and way lower than previous of 0.9%. Retail sales came in as forecast at minus 0.5%, and retail sales year on year dropped to 1.6%. So demand in the UK economy starting to slow a little bit here. We do have PMIs coming out of the UK in about 25 minutes as well. So we'll see how that plays out. We have had some PMIs out of Europe as well, declined. So not looking too great in Europe at the moment. We've also seen ECB members talking about the fact that wage growth is beginning to slow. So they may have to act in terms of wages. Rest of the day, we've got some Canada retail sales, and we've got PMIs out of the US later this afternoon. So let's get into the good stuff. Let's get into those charts. Let's talk about what we could look at going into next week. So I think next week, the focus is going to remain pretty much on the US-Iran tensions. We do also have Jackson Hole coming up, so there is a potential for a little bit of movement in the US dollar because of the the Fed speakers talking, and Fed Chair Walsh will be doing a speech as well. So we have to be aware of all those things going on going into next trading week. But big market to look at is our oil market. This has continued to climb over the last week or so. Tensions between the US and Iran are not really simmering down right now. Trump is applying economic sanctions on Tehran at the minute, which he hopes will bring them closer to a deal. Tehran are saying actually they will remove themselves from the nuclear agreements that have been in place if those sanctions continue. So there is a chance that we're not going to see any kind of reconciliation here in the near term. And what could that do? It could drive those oil prices up, potentially closing this gap that actually formed back on the 24th of July. So this was when we actually heard that a deal was coming into place and oil prices gapped. So it opened around about $100 and gapped all the way down into $88. And the market was pushing down on the idea that a deal between the US and Iran was coming into effect. But then no deal came and the market called its bluff. And since then, we've traded higher, now trading around about $95 per barrel. So if we see that continuation of a move higher here, we could close this gap that we had between the open of the 24th of July. That means that prices could continue higher up into the 98.70s. Now, if this happens, then what we should see potentially is still the increase in US bond yields. Now, US 2-year yields have been dropping since the 23rd of July, kind of in line with that drop in oil prices, right? But it's not pricing in this latest little rally in oil prices at the moment, right? Because data in the US has been weaker. We've seen inflation coming lower. We've seen NFP events coming lower. So bond market on the 2-year side, on the short end, pricing in that chance that rate hikes are not coming. So if we see a breakout of 4.2% and a move higher, that would be bullish US dollars, bearish for our gold and things like that. If we remain around these levels, choppy, pushing lower, that's good for our gold longs at the moment. Now, talking about the bond market, obviously the 10-year yields pushing higher again. So this day here was when we had US Treasury Secretary Scott Bessent come out and say they are buying bonds aggressively. So what basically has happened is bond market has an auction. So the US will have auctions to sell US debt. They do that to raise capital for things like infrastructure, for things like various different things that education, all this kind of stuff, right? So what they do is they sell bonds and they give almost like a guaranteed return for these bonds. Okay. Now, what the situation is no one's buying the bonds. That's why the yield has increased so much, because investors are demanding more money for, buying those bonds, for basically loaning the US government capital. They're asking for bigger returns. So think about it like this, right? So let's say on average, the S&P 500 returns, what is it? It's something like 5% per year, or it could be like 12% on average per year over a span of a while. I can never remember the stat fully. So think about this. Traders are now probably considering, well, bond yields are relatively high. We've got a US 30-year year at 5.25%. We've got US 10 years at 4.7%. Maybe if we drive these bond yields higher by selling bonds, maybe we can get more return on our capital, more guaranteed return. So at the moment, there's a battle between the US Treasury and the bond market vigilantes, which are driving these yields higher right now. They're demanding more for their return for holding their capital because they are worried about future growth, right? They're worried about future growth. So we're starting to see a complete reversal to that. Yesterday, Scott Bessent also announced more bond buybacks, and the market has ignored him. They've said, no, still don't see this. Yields could expect it to be higher. And it's because of that geopolitical tension between the US and Iran. Because if oil prices still rise, that's obviously going to be negative for global oil supply, global inflation pressures. So that's why we're seeing this move up in US 10 years. Now, this is supporting the dollar slightly in the short term, right? So if we go look at the US dollar at the minute, we had that aggressive drop off that initial bond buyback. Yesterday, we've pulled back. The market has rallied up a little bit. Today, could we see the same again? Potentially, right? Market could continue to push back up into the 99.50 handle if the bond market deems this as rubbish, right? And if the bond market starts green and we start seeing US yields start to decline, then maybe we'll see a push to the downside. But we've got big news coming up next week. How is the US escalation between them and Iran going to continue? How is it going to play out? How is Jackson Hole going to be seen? How is Fed Walsh going to try and calm down the markets? Because at the moment, he's kind of let the bond market do his thing. He's kind of saying no forward guidance is going to be given. So we're going to just let the bond market be the free market. Let it do what it's a free market. Let it do what it wants to do. Is he regretting that now? Potentially. So we'll see how he manages his speech going into next week, because that is going to be watched very, very closely for any kind of, walkbacks on what they're saying. What are the task force doing? How does he think about, the situation with inflation, X, Y, and Z? Now, I still feel that the data points to US dollar weakness. I'm just going to put that out there. But can the market pull back? Of course it can. It of course can pull back before seeing a continuation. So be aware of that. Could it just drop straight down to the next support point? Of course it can. But as traders, we use the technicals for timing. But I still feel US dollar is a weak currency. I still want to be on the side of selling US dollars. So if price does come back a little bit, then, we'll see how it reacts in terms of a pullback situation. One market, obviously, I still like the look of to the downside is US dollar CAD. This market is flying to the downside. There was a situation this week between, Trump slapping 50% tariffs on some goods from Canada. They have now started to come to some kind of resolution and a deal between the two nations now. And dollar CAD is collapsing on the back of this. CAD strength across the board pretty much, and especially against the US dollar. Now, we pointed out this US dollar CAD weakness at 142s, right? We were saying, can the market sustain this bullish uptrend? If not, and it breaks through, we're looking for downside. And we've had massive, massive downside. Is it too late? Is it too late? That's the only question I'm looking at now. Where are we in this narrative of this story? And I think maybe we could see a tiny bit more downside, but maybe only down into this 137 handle. Another market that I really like the look of was US dollar, Japanese yen. This week we were talking about getting short around about this 159.50 handle, and the market did reject and move lower from there. Price has since come back up into the 50 moving average of the 4-hour chart, rejecting it at the moment. But I'm a bit cautious on this one, because if yields are rising, dollar yen typically does rise. But we have to see what happens with this particular market. Obviously, another market we were very interested in buying this week was the pound against the US dollar. The market this week has rallied significantly. We started the week down at the 135.50 handle. We're heading up and rejecting the 136.50. So we've had like 100 pip rise this week out of cable. Now we are at a major resistance point now. So again, can we expect some kind of pullback from this area? Maybe a retrace back to that 135.50 before seeing any continuation. So a lot of the majors now coming into levels of resistance. So we might start to see a little bit of a pullback going into the next trading week. One market I also wanted to have a little look at was US dollar against the Swiss franc. We exposed this crowd exposure, the retail sentiment, which was saying that 89% of retail traders were long US dollar Swiss this week. Look what's happened to price action. We came up, we rejected the 0 spot 81.38 handle. We formed almost like a right shoulder of a head and shoulders pattern here. And then we've since broken to the downside and rejected. So when I tell you about these things, it's because they are for good measure. So when retail sentiment is so crowded, it means that trade is probably done. Okay. And what we saw was a big breakout. So if you managed to catch this move, well done. It was one that we pointed out at the start of the trading week. Finally, the last one that we wanted to point out was gold. Gold ripping higher. This is something we spoke about as well going into last week. We thought about this nice little breakout move happening here. We talked about the potential market finding a new low. the fundamentals at the moment are so bullish for gold that we're seeing prices rip higher and continuing higher. Now, if you haven't caught this gold move, you can start looking at potential correlation. So if we look across the silver also punched into the upside here. But if I kind of like side by side it a little bit, and let me just grab silver on this side. Look at where kind of silver is in the grand scheme of things, right? Where we look at the low that came in on gold, right at that support point, silver was also at support. Gold started to really rip higher. Silver then closed above the 50 moving average on this 4-hour chart and then kind of followed in its path as well. So very strong correlation there. If you're missing the gold moves, head over to silver. And then if you're missing those, head over to your likes of palladium, platinum. These ones are a little bit behind at the moment. And those markets could be something that you look to potentially get on the back of. But it's going to be a very interesting week next week. We also saw, obviously, Bitcoin ripped higher as well. There was obviously the Clarity Act that was passed by President Trump this week as well. Very much the same day as the bond buyback situation was happening. The US president announced the Clarity Act, and crypto has been bullish ever since. Bitcoin at 5.9% just today alone, ripping higher because of this. Now, we have to be aware that this bill has not passed through Congress yet. So it basically, what this is Trump is looking to regulate certain cryptocurrencies. Now, regulation is the opposite of what cryptocurrency stands for and what the whole crypto decentralized stands for. But at the same time, regulating a market brings in big players. It brings in big institutions. It brings in fresh capital. So that's why we're seeing this aggressive rise up in Bitcoin at the moment. Now, can you trade this? Absolutely. We offer CFD equivalents of this at Anzo Capital, so you can look for opportunities, but I wouldn't look to be a buyer now. We have to think about how we get involved in these trades, right? If I was to take a long position in here, where am I placing my stop loss? The safest place is below this swing low. So we just need to wait for a pullback. Markets do pull back. They don't move in straight lines like this. Bitcoin was in a sort of 6-week range before this latest bit of information came through. But you can also see it was like an inverse head and shoulders pattern, right? The left shoulder, head, right shoulder of the pattern, and the market is breaking higher. So to me, this could be a good opportunity to look for a retest of the neckline before seeing a continuation. But we just have to be aware that, although this Clarity Act has passed, it doesn't necessarily mean that it's going to get passed in Congress. So that could be the reversal of this particular trade. So just to kind of recap what we're going over, gold obviously ripping higher. This market, the fundamentals, we've been speaking about gold since the breakout or since these $4,000 lows, really. All the macro signals were pointing to a bullish gold. Market has now ripped higher. We're coming into a level of resistance as well for gold up at this $4,590 area. So expect some kind of pullbacks on this. If we were to come back, let's say, into this kind of 4,500 area, maybe we could see a short-term rebound and a move higher. So maybe looking for kind of pullbacks into this kind of area here around about 45.40, maybe even the 45.28 handle. That could be a nice area to look for continuation longs. If not, wait for a bit of a deeper retracement back towards this kind of low of the 4-hour, the 4,470s. But to me, this is a market that is very bullish. I expect markets to move up to 47.50s, potentially up into the 48.74s. So we've got time, right? Don't fear FOMO into this move. Like I said earlier, markets don't go in a straight line. That we rallied, we pause, we pull back, we rally. That's what we need to wait for now. Is there going to be another a few days of pause? And then if there is, look for the rally, right? So that's what we're going to be looking for here on gold prices. But let's see what happens going into next week. There's a lot of different moving parts next week. Like I said, the Jackson Hole Symposium is out next week. That's going to be a big moving event. We've got the political tension between the US and Iran. That's going to be the driver behind most of the headlines going into next week. And we have big inflation data in core PCE. So huge week for the US dollar again going into next trading week. Could this be a good catalyst to see gold move higher? So I'm going to leave it there, guys. If you did enjoy the live stream, please leave it a thumbs up, subscribe if you're new, and I will catch you in the next one. Remember as well, we have new videos coming up next week. I broke down the whole gold situation in specific videos. So thank you for watching, guys. Appreciate you all, and we'll speak to you very, very soon.